Is the fear of taxes keeping you stuck, maybe even paralyzing your decision to relocate or downsize? You're not alone. A lot of California homeowners hesitate to make a move because they're worried about property taxes, capital gains, or what happens if they sell their longtime home. The good news, California actually offers several powerful tax benefits that can make moving or cashing on our equity far more manageable than most people realize. Now, I'm not an accountant, but after years in real estate, I've seen firsthand how understanding a few key tax rules can save homeowners thousands, sometimes hundreds of thousands of dollars. Let's start with the big one, capital gain taxes. When you sell your primary residence, you may be eligible to exclude up to $250,000 in profit if you're single, or $500,000 if you're married and filing jointly, as long as you owned and live in that home for at least 2 of the 5 last years. A common misconception is confusing this with a 1031 exchange, which only applies to rental or investment properties. For your main home, the capital gains exclusion is what really counts. Your taxable gain is calculated by taking your sale price, subtract your purchase price, adding qualifying upgrades, then subtracting your selling cost. So please, save your receipts for remodels, improvements, and upgrades. They can make a big impact when it's time to calculate your actual gain. Next, let's touch on something more delicate but incredibly important, the step up in basis when your spouse or partner passes away. In these cases, the surviving spouse often receives a step up, meaning the home's tax basis adjusts to its market value at the date of passing. That can dramatically reduce or even eliminate taxable gains later when the property is sold. I had a client whose accountant didn't mention this, and once we cut it, it saved them nearly $700,000 in taxable gains. Remember, every state has its own set of rules. The key takeaway is make sure you've got the right professionals reviewing your situation. Finally, let's talk about property tax portability, something many homeowners overlook. You've probably heard of Proposition 60, 90, and 19. Prop 60 allowed homeowners over 55 to transfer their property tax base within the same county. Prop 90 extended that option to the selected cooperating counties. Prop 19, which is in effect now, simplifies everything. You can transform your property tax base anywhere in California, and it added some extra flexibility. If you're 55 or older, severely disabled, or a victim of wildfire or natural disaster, you can transfer your tax base up to 3 times in your lifetime. The only catch is, if your new home costs more than your old one, you'll pay taxes on the difference. You need to file your claim within 3 years of buying the new property. So if fear of taxes has been holding you back from selling, downsizing, or moving closer to family, let's talk. I'll help you strategize around your options, connect you with a trusted tax advisor, and make sure you keep as much of your hard-earned equity as possible. The key is not just selling your home, it's doing it smartly.